Welcome into the Crypto Bunker podcast. Today, I want to be looking at everything, really talking about macro, talking about how to think about investing in this crazy environment where we have the dollar dropping below 100 on the DXY, bonds falling, and stocks falling, which is a unique scenario, obviously, that a lot of people are talking about right now. So, um, this just happens to be the platinum chart. Um, it is a really good looking chart, isn't it? Um, you know, you actually get like 141% gain just by going to the all-time high. On a monthly time frame, we're looking at the RSI is just stuck in this middle range. And it's not actually unprecedented to see this play out in platinum. In fact, it's played out before. And essentially it did, it did play out even in this scenario. So it's definitely possible and it actually made target. I mean, traded really, really well. Um, and so, just an interesting thing to look at, thing to recognize in the world that we live in today. Is platinum something that you would potentially want in your portfolio? I don't know, and I didn't come here to talk about, platinum or even silver for that matter, but the silver chart, I mean, we're talking about something um, you know, that is truly a magnificent thing. Now, if I just take all this out for now and I just show you the silver chart, this is a monthly chart of silver. And what I think we have here, what if we could say, and I've said this before, that this is just one massive cup and handle. Um, maybe, maybe it is. Well, if it is, okay, if it is, now let's just say if it is a massive cup and handle, then we would have to take, I mean, let's just be conservative. Um, we're looking at a $400 silver price. Now, how would we get to a $400 silver price? Okay. Well, let's say gold gets to, um, let's say this, let's say gold doubles from here. Okay. Let's say it goes to $6,400, right? Then what we have to do is we have to take $6,400 divided by $400, and we get a gold to silver ratio of 16, which is actually the traditional gold to silver ratio that was used in ancient Roman times. We can look up and say, what was the gold silver ratio in Roman times? Let's see if it gives us. So it was a 12-to-1 ratio. So let's say $6,400 gold divided by 12-to-1 ratio. Then we're looking at a $533 silver price. Now, I don't want to get anyone too crazy bulled up, but we live in very interesting times, and the old system is essentially collapsing. And that's kind of what, I'm feeling and thinking. And I understand that like every time that someone thinks that, right? Usually it's like a bottom and it's a top for gold and it's a top for silver and everything's gonna go back to normal and all that. Um, Gold though, like the price of gold doesn't really reflect the total debt in the system, right? So if we go to um, US debt clock, you can see the real-time national debt, which right now is 36 million, or sorry, trillion, 36.7 trillion. Okay, so now if we go to the top assets in the world and we look at assets ranked by market cap, we have gold at 21.8 trillion. So if we take 37.8 trillion divided by 21.8 trillion, we get a 1.73x, which if you take that multiplied by the gold price, we then get a 56.35 gold price. And then if we take the ancient Rome times gold to silver ratio, we get a $469 silver. So, let's just look, and because usually they have, at least they used to, but they have changed this around quite a bit. Let's see. So yeah, so dollar to silver ratio is you put us at a $1,500 silver, and the gold would put us at 12,612. And that's just dollar to gold ratio that had dollars that have been created and circulated. And in the past 10 years, it's $9,338 gold. So again, these are the type of fundamentals that you have to look at with gold rather than the chart. So the technicals on the chart are like null and void in some ways. Okay, so let's look at also the GDX now. Okay, so the GDX, we could also look at as sort of this reverse head and shoulders, right? In some ways, or cup and handle, which is basically the same thing. But we kind of have, our head would be here, our shoulders would kind of be here. And then what we would do is we would take that target, we would move it up to the neckline, and then we would get a target price of around 200 basically for gold for GDX. And the thing about the GDX is, that's about a 300% gain from here. Obviously, these are massive numbers, right? But what I am proposing is that in a world where the dollar loses this long-term trend line and goes to the bottom of the trend line, which was in, 08, I guess you could say, is that a world where, gold, goes up a lot? Probably, right? It's like a 36% correction. It's not actually that much. What about a world where we actually make a new low, though, right? So we come down, we chop, we make this low, and then we actually make a new low. Then where are we at, right? So that's another scenario to think about. Another scenario to think about is the rates. So I did talk about TLT. I did make a post saying that I got out of that. It was a mistake. Sometimes you have to recognize your mistakes early to make a good decision. And essentially, right now we're having one of the highest monthly candles ever. Or you could say weekly. If we look at the weekly candle, this is one of the biggest weekly candles on rates, really, since probably April 2022 or January 2022. And that was when rates were being raised by the Fed, inflation was high, but now we're experiencing deflation. The Fed is holding rates steady. And usually what happens is the bond market will front run the Fed, and we will start to price in recession, and bonds will go up and rates will go down. But right now what we're seeing is rates are spiking higher because I think that there's so much uncertainty there's a loss of trust in the US. There's a loss of trust in the Trump plan for tariffs. And this loss of trust correlates to the stock market, the dollar, and the bond market. And usually people don't leave those three things. And right now they're leaving all three. And so that rotation is very strong. And we also have the oil market crashing. And that combination of things is really, really bullish for gold miners. because they have gold in the ground. Their main input cost is oil, and they have debt that is in dollars. So they take dollars, they invest into oil, drilling equipment, etc. They get gold out of the ground. So they're trading dollars and debt for gold, and their main input cost is oil. So essentially, when the dollar goes down and oil goes down, this is an extremely bullish environment for gold miners, and especially because people don't know what to invest in this environment. And so there's really nowhere to go because it's a potential that we get a global recession with all these tariffs, and everything is sort of uninvestable, even the dollar and even bonds. So there's really only a few places to go. One of them is the gold mining sector, and gold and silver and platinum, etc. Another one is crypto. Now, let's just take a look at the Bitcoin chart. Because what I'm seeing in the Bitcoin chart is a trend line. And what I'm seeing is that this trend line has held strong from the beginning of the bull market. And we are now at that trend line. And what I'm seeing is that there's a potential that Bitcoin could offer an alternative, something that's decentralized, something that doesn't care about any government tariff, government policy. They don't care even if Trump comes out and says, hey, we're not going to do a Bitcoin reserve. Doesn't matter. The point is, can you hold your value in something that is outside the system? And I also want to talk about Ethereum. And I want to give you a few scenarios. And, I think that what I think would be the coolest thing to see for me would be that for stocks to go sideways and down, and for Bitcoin and Ethereum, maybe just Bitcoin, to catch a bid for years to come. That would be really, really a cool thing to see. And I think theoretically and fundamentally, it probably should happen. Because as we're working out essentially a whole new system, we need a whole new, everyone says we need like a Bretton Woods deal, and we need a Mar-a-Lago Accord, or whatever you want to call it. And, we do. And what better alternative system than, the Ethereum blockchain, right? What better alternative system is there? You have a decentralized, neutral platform that you can literally put everything on top of, including the laws, the, organizations, companies, all of it. And you can have voting, you can have everyone's on, you can have identity, you can have AIs, like AI agents that are working on the platform. So there's all of these like really cool things you can do with Ethereum that I think that people are underestimating. I think people look at Ethereum as they don't really like see the big picture. And I just think that if you think of like gold, right? Like gold is some people say it's the center of all finance. It's like an upside down pyramid, and there's like derivatives at the top and all these things that come down, and then gold is at the bottom of the pyramid with silver, because it's like a physical thing that's you can't repatriate, or you can't paper over, and all these things that they tried to do with it. And now everyone wants their gold back, and like there's just this mad scramble for physical gold. And we know that the system has been rigged, and right now they're pretty much scrambling to do anything they can to not have that system blow up. But gold going up is essentially saying this system is screwed. This old system is done, because gold is the reflection of the system, the current system, right? Gold is the reflection of the current system, and it's the bedrock of that system. Now, some people say, well, treasuries is the bedrock. But when treasuries don't work, you can see what gold is doing. That means gold is really the safest of all of the safe havens, safer than treasuries even. Now, in the future, is there a scenario where Ethereum is the bedrock of the global financial system? I believe that yes, that is possible. I believe that Ethereum could be the neutral platform that all countries build on top of, all banks, all companies. Everything becomes tokenized. We live in a future world where, like, there's AI agents, there's individual actors, there's businesses, and we can transact on a peer-to-peer level on an equal playing field. This is a world that I could see coming with Ethereum. So I just want to put that out there. And I am not saying that you should go all in on ETH by any means. In fact, I think that, I mean, actually right now in the past hour, we've had a pretty major move here that is just kind of keeps going. Pretty impressive move here that ETH is actually putting in. And, I think it dropped to like 15, let's see, it dropped to 1570 only a few hours ago. And now it's really coming back. And we also see that with Bitcoin. Bitcoin on the hourly went down to 83.2, and now it's back up again. So I do think we probably will get a risk on rally in the next week, because Trump, has like taken off a lot of the tariffs, and like the whole China thing seems to be kind of blowing over at this point. And what I do want to emphasize is with ETH, the idea is so big. The idea that I just put out there is so big that, like, think of ETH as that underlying asset that actually you need to secure literally the entire world financial system and world, like, company system. It's just such a big idea, right? Like $100,000 ETH would be like the base case of that world. And that's like maybe an $8 trillion asset. But if it's securing the entire financial system, it could be 100 trillion, right? Because a lot of times when you hear Michael Saylor talk about Bitcoin, he's really talking about ETH. But he's just saying everything that ETH is. He's essentially saying everything that ETH is, he's just applying to Bitcoin. And everything that AI is, he's applying to Bitcoin. He just applies everything to Bitcoin, and it doesn't really take into account the fact that there are other things doing these things, right? It's not just Bitcoin. Bitcoin is, potentially digital gold. Okay, cool. It has a better chart than Ethereum. I get it. It looks like not great. All that stuff. I get it. But basically I'm here to say ETH is such a big idea that you actually don't need to own that much of it. So just keep that in mind. For me, I'm scaling in over a monthly period, and I'm trying to do it over the next couple of years, where I'm just putting like $100 into ETH, basically per month. Actually 75 into ETH and 25 into Chainlink, because I think that Chainlink is obviously such an important technology with all of this. Not necessarily a token, but the technology itself is a network. And so I think they'll figure out a way to monetize that. Now, if we look at, and anyway, so in that world, it's an asymmetric bet. It's a massive asymmetric upside, and it may not work out. And so you really should be saving more money than you're putting into it, and you should just think long term because you're, the idea is it's too asymmetric to have everything in it, because it actually could fail. So, that's just something to think about there. So, with the S&P, I think we could rally probably another 7% to the 200-day moving average. We see the averages starting to cross bearish here, and I think that we could go up and touch that and very much, not, be rejected by that. And then we probably come down here and we would probably then make a new low around May or June. So that's kind of my base case. We see it in every bear market, there's always a rally up, and that's kind of where you can see we rallied up through the 200 at that point. I don't think we'll get that crazy here. I don't think we have that in us in this one. And so if we look at it on a long-term time frame, I actually do think we're going to come down even lower than people expect on this one. So we probably will break through this and, kind of bounce down and then, just kind of have this like rolling sort of thing that ends up coming back up maybe eventually. But it's not going to be pretty. And I think a lot of people are going to lose their jobs. And so that's why when you're in such a retail heavy asset like Bitcoin and like Ethereum, that's owned by a lot of people who have jobs. It's not owned necessarily by global pension funds and hedge fund or global pension funds and countries and things like that, who are using it to store their value for a long period of time yet. We may get to that future in 2045, right? Or something like that. So again, I just want to emphasize not to FOMO in this rally. This rally, it is something where, yes, I want to own Bitcoin and Ethereum, but I want to own them for the longer term. And that might be, by the way, this could be the middle of a bull run that extends and actually does go to the targets, because it's so funny that we've been waiting and playing for this bull market. And I think at this point, people have literally forgotten that we are in a bull market year for Bitcoin. And I want to go back to the Bitcoin chart because I just want to emphasize that to people. I don't think, people are sort of sleeping a little bit at the wheel. And I am totally, definitely accused of that as well, because, I have been sucked in as well to all the craziness that's happening. But in reality, like even on a weekly time frame, we are just at the 100-week moving average, which we were at here before. And, usually we do test those at the beginning of a bull market. We tested it actually, a little bit in 2017. And some people say that we are still early and we haven't even seen, the actual move yet. And I think there's a case to be made that that is true. And, the reason I'm saying that is BlackRock and all these institutions, they do need to funnel money somewhere if the US stock market's not going to work and earnings are going to be declining. And it's kind of like 2000 to 2008 or 11, right? The gold, you had a historic bull run through that time. And I think gold can have a bull run with Bitcoin in this scenario. And maybe altcoins are in on it too. I think that would be a little crazy, but it's possible. Maybe altcoins do hold up better than people think. Maybe that the QE and like whatever, dollar liquidity actually helps altcoins as well. I don't think it will be good for equities. I just maintain that we will not make a new equity high this year. I just think there's no way, and maybe I'm being too emotional, and maybe that shows, that there will be another blow off top in equities. I do think we're not as overbought as we were like in the 2000 bubble in terms of what the charts are saying. And we're also not as overbought as we were in 2021 in terms of the moving averages, because if we look at how wide we were there, we're not even close to that in this bull market. So that is all to say that 2025 is the bull run, right? Every 5 years we have a top in Bitcoin. We can look back and we can say we had a top in 2013. We can say we had a top in 2017, 4 years later. We had a top in 2021. And now will we top in 2025? Here. That would be every 4 years. And that's what we've all been waiting for, right? We've been waiting for the final blow off top to take us to 200K Bitcoin. And for me, it's worth it to have a position in Bitcoin, even if I think that Bitcoin might go down with the ship in terms of equities. Because the issue is that everyone who owns Bitcoin, it seems like there's a retail crowd who owns Nvidia, Tesla, and Bitcoin. Like though, they have that sort of portfolio construction. And as those start to sell off more, there's a potential that maybe they sell their Bitcoin. Or again, a heavy retail crowd, if we get an unemployment cycle, those are the type of people who are not then going on Coinbase, right? They don't have that $100 to then put into Coinbase. They have to sell their liquid assets. The easiest thing to sell is crypto. You're probably not going to sell your gold or your silver. You're probably going to sell your crypto, right? And it's possible that has already happened. It's possible that retail has already capitulated. All those things are possible. I did want to show, if I have it, yeah, potential scenario for ETH here. So what I wanted to show was just this what we saw here. I basically just overlaid that chart here, and I think it's almost perfect with how I see sort of like the equity scenario playing out. Like if equities do what I think they're going to do, and if ETH trades with those equities, I think this is a very accurate picture of what we're going to see over the next 2 years. So basically what I see is essentially the same thing has happened here. We can say we already topped for the cycle. Let's just say that that's the case. It might not be. Let's say that that's the case. Because today, by the way, was a massive reversal now that we're looking at the price, okay? But again, it's not about the price with ETH. It's about the idea. It's about the possibility of what Ethereum, the network, can provide to the world. It's not about the price of ETH, which is why, again, you can just dollar cost average slowly over time and have a longer term horizon than anyone else. If you have a longer term horizon than anyone else, you can dollar cost average smaller than anyone else, and you can actually outdo them because you have that grand vision. You have that $100,000 price target, because that is the ultimate goal of what Ethereum could be. And that is like more than a 50x from here, right? So again, you put $1,000 in, that's $50,000. You put, whatever it is, that's kind of the ultimate vision. So even this, going up to, 16K in 2028, that is, that's not like I actually think that this part of this chart you can just erase, right? It's more about what we're going to see here. And I think that coming down to around that 600 level, shake everyone out from this entire cycle, right? So this low was around 900, shake them out, right? Because everyone has their liquidation ratios right below that level, right? So if we go below that at 900 or $1,000 level, then we sell off another, 30% down to 600 and everyone thinks it's dead. Then we hop up and we go back up and test. I could see then a retest to shake everyone out again. And that would be the perfect scenario for a slingshot, just like we had here. And I will say that what happened back here, looking back at it, was such an opportunity of a lifetime, because of that double shakeout, right? Because of the double shakeout, suck everyone back in, shake them out again, suck everyone back in, shake them out all the way to that bottom, and then it's just a slingshot, right? I mean, that's something we're never going to see again. So we just have to take that out of our minds. That's probably not going to happen. But ETH also, I think, benefits from the world that we could be going into, which is like, maybe, and again, this is just sort of this utopian thing, right? I don't really believe in that. I don't believe in the AI utopia where everything is free and everything is good and everything is taken care of. But in that scenario, ETH should be at 20,000, because then we would have quantitative easing. We'd probably have like some weird version of a stock market that wouldn't even be the same. There'd be like way less companies. And I think that unfortunately, through these next couple of years, um, we are going to see a lot of companies who are going to fail. We are going to see more consolidation to the top, because it's not going to be a breadth of companies. It's going to be less and less companies, less and less jobs, more reliance on the government, more authoritarian regime sort of the government. And so this is why it's something that like Ethereum, some people could say Ethereum, it's too late, right? Because we needed to, like, this is our opportunity though, in the next like 2 to 3 years, as everything collapses and as companies furlough, as people lose their jobs, et cetera, to move everything on chain. And I firmly believe that Ethereum is here for the right reasons. I don't see it as, a negative to society. I see it as a positive and as a benefit to society. And because I think it's a peer-to-peer smart contract platform that anyone can use. And I really think that we need that in today's day and age. We need a peer-to-peer decentralized place where people can go to do commerce with each other. And on a real basis, we need that badly. And I think that Ethereum can provide that for the future, regardless of the price of the asset. Just remember that grand vision that I laid out at the beginning, where the entire financial system is built on Ethereum, because that's really what we're going towards. And I think it's just such a big vision that, again, you just don't need much. You really don't. You just don't need to be all in on it. You just need a small chunk, and you just need to keep building that chunk over time. And just hold ETH, the asset, the pristine collateral of the whole system. So hopefully you got something out of the video. If you did, please like, subscribe, and have a great rest of your day.